Hey everyone, today I want to address a question that's been a lot of minds recently, China stocks. Okay, with their recent surge, okay, the rally on the China stocks, right? The big question is, should we invest in China stocks now? So in this video, I will provide our opinion and thought process, okay, so we can help you make your own independent decision on whether investing in the China stock market is for you. All right. So first, why are China stocks soaring? Now let's start with what's driving this rally. The Chinese government has stepped in with the stimulus measures, and intervention, pumping the stock market and causing the prices to soar. But this raises an important question. How long will this last? Now, before we dive deeper, now I want to share our Better Investing Academy's investing philosophy. So here at Investing Academy Better Investing Academy, our focus isn't on giving stock tips. All right. Instead, we aim to help you improve, your investing skills through a long-term approach, based on company fundamentals. And this perspective is especially critical when considering China stocks. So, company transparency issue. So the BIA team here tend to invest less in China stocks because many companies there lack detailed transparency. A clear example, of course, is Pinduoduo, which we already stopped following. If you have been seen in our YouTube channel, we stopped already on following Pinduoduo because the management has been withholding information from shareholders. And this is something we simply can't overlook. So yes, the short-term stimulus here has driven up prices. But what happens when the stimulus ends? That's something every investor should ask themselves. All right. And another key point is this. In a market that's heavily influenced by government intervention, I tell you this, there is no need to overanalyze or pick the best China stocks right now. Because with the government pushing the entire market up, every stock, good or bad, has already gone up. So please, don't be overconfident and don't give yourself too much credit during this rally. Because it's like throwing darts at the board. No matter which stock you pick, you are likely making money, okay, at this moment here. But it's important to remember, this price increase here is not due to solid company fundamentals. It's driven by external factors like government policies and the positive consumer sentiment currently. Okay. So, even if you are making impressive short-term gains, like 100% return, for instance, you need to ask yourself this question. What's your plan for the next few years? Will you continue reinvesting in these same stocks or will you look elsewhere? So these are critical considerations for any serious investor. Okay, because at Better Investing Academy, we prefer to focus on fundamentals. There's a big difference between a stock rising due to government intervention and one rising because of strong company performance. And I will tell you this, only one of them provide a predictable and reliable strategy for long-term investing. And I know you know which one. Okay? And the next point here is very important. Don't be the last one holding the bag. So you can ride the wave in this China stock rally. Okay, it's up to you. But please be careful not to be the last one holding the hot potato when the market cools down. I will tell you, we don't have the expertise on making money this way. So we won't comment much. It's crucial to also understand the difference between speculating, trading, and investing. Which one are you using right now? All can be profitable, but they require different skill sets. Now, maybe not for speculating, because there's gambling actually. So a few questions I want to throw to you is this. How much are you willing to invest in China stocks? How confident are you in the China stock that you have chosen? Okay. Your decision to invest in China stocks is because of after seeing the prices go up or because the business there is better. So only you know the answer. So remember this, just as a stock that crashes can recover due to strong fundamentals, a stock that rises despite weak fundamentals will eventually fall back down. Okay? Now, the next point, China versus US market. Right? Where is your edge? Now, I won't rule out that there's potential for China stocks to perform better in the future. Because the idea is that these stimulus measures here will put more money into the consumers' pockets, which could boost company revenues down the line. Now, investing in China stocks isn't inherently wrong. But whether it's China or US stocks, the key question is, where do you have the competitive edge to capitalize on this potential? What evidence or fact that you can rely on to really see your company recovering okay, or growing and invest with confidence. And this leads to my next point, investing with certainty. At Better Investing Academy, we don't base our investments on assumptions. We invest based on certainty and visibility. And that comes from reliable company information like earnings calls, presentations, interviews, and conferences that US companies provide regularly. China stocks, unfortunately, don't offer the same level of transparency. And even if they do, okay, the information is often limited. So there isn't much information for us to research so that we can make an informed and confident decision to put our hard-earned money. So our method is simple. A stock price increase when revenue and net profit increase. And the only way to confidently invest a significant portion of your limited capital is to thoroughly understand the business and have confidence on how the future business will become. And this confidence here comes from clear, precise data from the company management, not speculation, not gambling, and definitely not investing with hope. Okay, now the next point, government intervention. Now, one major downside to investing in China is this, all right, the government intervention. The Chinese government can enact laws that fundamentally change or even break a company's business model overnight. Okay, now for example, this was when the Chinese government, initiated a regulatory crackdown on its tech giants, okay, around 2020 or 2021. And this affected stocks like Alibaba and Tencent. Then suddenly, there is an education policy change in 2021, okay, on its private education sector. Yeah. So, so because of this, it affected stocks like TAL Education and New Oriented Education. You can see the New Oriented Education immediately from, this kind of stock can just plunge 94% or 97% in a span of half a year like that. So it's really very unpredictable. And this is something that I don't want. Another one is like Ouya. Okay. A government can just suddenly step in, and block a merger, for example. From a very strong company, suddenly the fundamentals change immediately overnight because of one decision by the China government. And this is something that we cannot foresee at all or even predict. So that's why this is something, it's a risk that I'm not comfortable to take. So you have to think about it. Okay, in China, their policy is good for the people, but it's quite bad for the company and shareholders. So when you know that the China government can just, swoop in anytime without warning and fundamentally affect your company's business, this is a risk, again, that I'm not comfortable to take. All right. The next point is this. All right. Go where the grass is green. Now, again, I would like to share a post from Adam Khoo here, and this is something that I agree with him, of course. So you can see why, the team here, prefer to, invest in the US stock market. And again, I'm not putting this opinion on Adam Khoo, of course, okay, because I do not know his stand. Okay, but what I'm sharing here is, leveraging on his content here. So again, you can see why we prefer the US stock market is because, okay, throughout the long term, equity returns has been very positive. Yeah, China, yes, the GDP growth is very, very high, but then you can see that equity returns has been very, very bad. Right? It's negative, to be honest. Yeah. So, if you want to invest, why not go to the market where it's positive and has a long track record of going up over the future? And when you pick stocks there, you have a higher chance of making money. Yeah. So the next point I want to tell you guys is there's no need to FOMO on China stocks. Really, because I know some of you might be thinking, hey, you miss out on China stocks. That's why you are being negative about them. But let me clear this up for you. I haven't missed out on any profits at all. Because if that's the argument, then any investor could have missed out on gains in property, crypto, options, or even, Forex, for example. So there are countless ways to invest. The key is to find one where you can manage your risk and maximize your chances of success. For me, that's the US stocks. Okay. And some, of course, from Singapore and Malaysia. You can see my results here already. Okay. We have already made, 200%, close to 200% or 150% returns from stocks like Palantir and CrowdStrike. Yeah, because you have seen, I'm showing the stocks that we are already showing in our YouTube channel. Of course, should be 150% return stock before the crash. Okay. So this is something that we are, more comfortable in. So honestly, did I really miss the profits? Let me show you this chart. You can see here, yeah, the ETF, FXI and KWEB, which is, a ETF for the broader market for the China stock. Yeah, for the past 5 years, okay, if you invest in it, you are actually still on the negative, as opposed to SPY and QQQ. Okay, the whole broader market has went up 91%, 152%. So did I really miss out? I don't think so, because I have already been, slowly getting profits, okay, from the US market. So I didn't miss out any profits at all. Yeah. So to wrap things up here, okay, my personal view, I am not condemning the China stock market. Okay, what I'm doing here is I'm sharing our strategy, okay, and the process, and hopefully this will assist you in your decision on whether you still want to invest in China stocks. Okay, both China and the US market, you can make money. But what I'm saying is that the US market is our playing field. It's the area where we are most comfortable with because we understand the game best. We know how to take advantage of the rules, and it's where we have the competitive edge from the overall stock market and retail investors to profit safely over the long term. So I shall stick with investing in the US, Singapore, and Malaysia. All right. So to wrap things up, okay, this is again my personal message to our community members. Okay, so I would like to share this with you guys. So again, there's no need to FOMO on China stocks. What matters is the total portfolio return and how you achieve these returns. So we can make money from everywhere, no problem. But it depends on how you get your returns. Is it you want through speculation and or even confirmation, or through uncertainty or stability? So, and also if you decided to go to China, to invest, you have to think, you buy because the price go up or because the company business there is better. Okay. So the key point is I want to, to leave it to you guys is to pick the field where you have a competitive edge over the general market and retail investors. Okay, investing is for the long run. It's not for the few months or even just 1 year. So invest in a way where you can consistently generate the returns year after year while sleeping well at night. Okay. So I hope you guys enjoy this content here and hopefully it can help you in making your decision. And again, if you like this type of content here, do click the subscribe button and there are more content that I would like to share with you guys. Okay. So again, thanks for watching, guys.